Consumer confidence just jumped 4 points. Oil crashed 20% in just 1 week. The producer price index just hit its highest level since November 22, and the spring real estate market just delivered the strongest pending home sales surge since September 2024. The economic signals coming in at real estate investors right now are pointing in completely different directions all at once. And if you don't know how to read them, you could make a very expensive mistake on your next deal. Welcome back to OpenLane Funding. I'm Robert Homewood, and this is week 2 of our June 2026 Market Deep Dive. And today we are covering two critical sections with the economic indicators affecting real estate and the spring 2026 real estate market overall. These sections give you the big picture context behind everything else that we're going to be covering this week. Now let us start with the economic backdrop. Here are the numbers that matter for real estate investors. The May Consumer Price Index headline is plus 4.2% year over year. That is in line with the forecast. But the monthly number was actually hot at plus 0.5%. However, this is critical. The May Core Consumer Price Index month over month came in at just 0.2%. And that is a dovish beat that kept the bond markets from panicking. That's great. The May Producer Price Index, this is one that is generally hot, or it came in plus 1.1% month over month at 0.3 to 0.4% beat. Now that is plus 6.5% year over year, the highest since November 22, and that is pipeline inflation. It is not consumer prices yet, but it could be. Now the oil factor. West Texas Intermediate crude fell from 95 down to 75 to 76 per barrel after the United States-Iran ceasefire memorandum of understanding was signed June 17th. Now that is nearly a 20% drop in 1 week. That oil collapse is doing the disinflationary work for the economy right now. Every $10 drop in oil removes about 15 to 20 basis points of upward pressure on the mortgage rates through the inflation transmission channel. And I can tell you that the cheaper the barrel, the cheaper the price per gallon, the cheaper it is for contractors to be making trucks back and forth to properties. The University of Michigan, for 5-year inflation, expectations dropped 50 basis points to 3.4%. And that's a meaningful ease of de-anchoring fears. Consumer sentiment rose from 44.8 to 48.9. The Fed's summary of economic projections now shows 2026 core personal consumption expenditures at 3.3%. That is up 60 basis points from March. Now, that is the Fed telling you, hey, inflation is not going away fast enough. And what does that mean for your deals? That it means that the rate environment is generally uncertain for the back half of 2026. We don't know what's going to happen. The July 14th Consumer Price Index report for the June data is the single most important number between now and the September Federal Open Market Committee. Now, if this content is helping you stay ahead of the market, please subscribe, follow us on Facebook and on LinkedIn. The links are in the description. We are dropping market updates every week so that you do not miss a move. Now, let us put it all together for the spring market. May's existing home sales hit 4.17 million annualized. That is the highest since December 2025. And with a record median price of $429,300. Pending home sales posted the strongest monthly gain since September 2024, and that's up 3.8% month over month and 4.8% year over year, with every region positive for the first time since 2023. But here is the tension. Builder confidence fell to 35 on the National Association of Home Builders Housing Market Index. And that's the 14th consecutive month below 40%. That's 62% of builders right now are using sales incentives. 35% are cutting prices with average cuts of about 6%. Now, your action plan right now. Number one, demand is improving on existing homes, but new construction is starting to struggle. That means that resale and value add plays make more sense than buying new builds right now. Number two, with rates in the 6.47 to 6.6% range, coverage ratio loans at best tier pricing of 5.99 to about 6.125, they are still the most competitive tool for investment property financing right now. Number three, the July 14th Consumer Price Index print is your single most important upcoming data point, and we will be covering it live on this channel. So subscribe so you don't miss it. I'm Robert with OpenLane Funding, at DSCR loans, fix and flip, bridge, new construction financing, whatever you need. I'm ready to help you get your deal funded. Reach out using the links below. My number is 208-215-9936. Call or text me at any time so that I can help you. I'm going to be dropping more videos out this week. Please follow along. I look forward to helping you guys out.